The market is starting to sell. We got a lot on the calendar. Just wanted to hop into a video here, give you a roadmap for this week, as well as cover some recent trades where we made some really nice returns. You can see here in the Discord, we just closed two NVIDIA spreads over the weekend. We had some 105 to 103 puts, and we made 103% return. And then in the main portfolio, just banger after banger, we got IBIT puts. We closed those for 134%. Still got two open. Might add some more there because I think Bitcoin's going to probably reject again. And then we closed 4 of 5 NVIDIA 105 puts for April 17th at 155% return. So overall, really nice trades over the weekend. There was some market weakness after we broke down this bear flag. So I knew that we were going to head lower once we had this break of that lower trend line. Now, if you just look at what I talked about recently, we had this move down. We didn't quite make it to that lower trend line, but we're starting to bounce to the upside. Now, what we had is something that I call just like a gap down and then a fill, right? So it gaps down and then it fills the gap upwards and then it rejects after filling that gap. And you can see here on the 5-minute chart, we actually gapped down below a previous bull gap. And that created somewhat of like an island, right? Because you have a bull gap and a bear gap overlapping. And then price actually filled in the bull gap and the bear gap. So you can see these two gaps that were overlapping, the two different boxes. Once we started pushing into this gap, it was pretty much at that point we were going to start to fill much higher. Bulls were showing up. At the beginning of the day, we were at a over 80% down volume. Right now we're at 57%. So the bulls showed up today and filled that gap higher. And we've hit $555.16. So far we've rejected from there. We're holding this trend line intraday. So it's possible we could continue to push higher, even fill this gap completely. That's on the S&P 500. Qs are starting to fill in this gap as well, but I don't think it's going to be enough today for this to fill completely. So there'll be a bear gap that remains on QQQ as well as IWM. Now, we did play some Palantir puts. Unfortunately, I didn't take profit. I should have, and this is really just a learning experience with trading. I did not have this lower trend line. That green trend line I did not have on my chart. It was really just a mistake on my end. I should have paid more close attention to Palantir because we entered into some Palantir $70 puts for 425. There was like over $1 million in 60p for 425, and we just kind of played a higher strike. It's a better risk return ratio than whoever's buying these 1 million crash puts. And so we saw that flow and we made our investment decision mainly on that flow. What I should have done was analyze the stock chart a bit more. I see that there's all these different support levels as well as volume profile, but I did not have that trend line charted. I just saw that we broke this more recent trend and we started to sell to the downside, and that's why I bought puts on Friday. So I was looking at that more recent trend, and what I should have been doing was looking at the longer term trend as a target for when we actually tested that level. You can see we bounced right from it, right? So I should have took profit there, even though I have April 25th puts. But now that we're filling this gap to the upside, the gap is still partially filled. It hasn't completely filled. This 84 zone is holding as resistance. As long as I see that that level continues to hold, then we'll reject, or even this gap. Like, honestly, I think Palantir is extremely overvalued. If you look at it on a price to earnings ratio, it's 476. That means you have to spend $476 for $1 of earnings. So it's extremely overvalued from its historical 12-month price to earnings ratio. It is growing. It's a solid company. It's just really overvalued. And I think we're going to probably push to 60, 50, even 45. This gap that was formed all the way back in November on the election, I know at some point Palantir is going to go down there. I'll bet the house on it that at some point that will go down there. Now, I'm not playing any sort of puts really beyond April 25th, I'm really just looking to take profit where I can. If this green trend line breaks, then of course we're going to have a move much lower. We'll first hit the more recent lows around 74. Then there's a low volume node here around like 69 that I'd be looking at, as well as like around 68 candle support. So right around that like 69 level is probably where I plan to take profit if we can break this lower, because usually when you have a break of a trend, price likes to go back and retest the breakdown. So we'll have like a move lower first like this, and then we'll have some sort of bounce near a support level. We'll probably come back and retest that level. So I want to take profit into strength. Always take profit. The market does not want to give money away. When people are winning and making a lot of money, it's only short-lived in this market. You just have to be very nimble, flexible, trade in and out of positions, and just be smart with your money, because right now there's a lot of volatility, and volatility cuts both ways. So even though we're bouncing today, we could be down another 2 or 3% in the market tomorrow. But the most high level, high risk, but high return trade that I'm looking for with the greatest probability of making 10, 20, 30, 50, even 100 times my money in a short period of time is playing SPY calls when there's a capitulation move in the market. And I've talked about this in other videos, but let me just run it through it really quickly with you. So as you can see here, back on August 5th, this was the Japan carry unwind trade that happened when Japan raised rates. We had this really strong spike down. If I show you, well, the VIX, I can add it to the chart here. I just forget. Let's see. So yeah, okay, here we go. So if I want to compare, I don't know why this compare thing is not working. Anyway, I'll just look at VIX. So VIX went to 65. It jumped on that day. The bottom was in. There was max panic in the market. And when you have mass panic in the market, there's a lot of sellers. And when there's a lot of sellers, at some point, there's no more sellers, right? Because everybody is selling. Maybe over 90% down volume is what I'm looking for, even 95%, 96%, whatever it is. When that happens and everybody's selling, at some point there's no more sellers, and then naturally price can only go up. And so you can see here that this had a huge gap down on that day, and that's really what I'm looking for, is this massive gap down. So we had price move from 528 on SPY, and it gapped all the way down to like 505, 506, and then even a little bit further, it dropped a little bit further than the open around 505. So a huge drop, 503 or whatever it was, right? So from 527 to 503, that's like a 24-point drop on SPY. And then you can see that what happened there, right? We went from 503, 505, and then at the top of the day, it was around 518. Well, if I timed it perfectly at 505 and I bought 510 calls that expire the same day, maybe those 510 calls were like $20 or $30 a contract. $20 or $30 a contract, if it moved up to 518, so 518 minus 510, that's $8. But on a contract, you times it by 100. It's the right to buy 100 shares. So that would be $800 per contract from like $20 or $30, right? So $20 to $800, that's if it closed there, right? That doesn't even consider like the time component. And when price is pumping like that, there's a lot of volume, prices are spiking. And so this $800, probably when it actually hit 518 midday, was probably closer to like $1,200, right? So that's a 60 times my money trade if I can time it correctly. And that's what I'm looking for in the market. I want a big spike down on SPY, like 4%, 3%, whatever it is. I want to buy SPY calls that expire the same day out of the money, because I'm trying to take a bit more risk, but not too far out the money, because I still want to give myself a chance to go in the money. I would expect like at least a 2% move during the day. So like 2% out the money calls is probably what I'd be buying. You can see that price went 2.6% from the lows. And if I time it correctly, I could 60 times my money. So even if I take a little bit of risk, we'll just say we take $1,000 and we risk those, worst case scenario, I lose my $1,000. Best case scenario, I make 60 grand. Now, I probably would be taking profit as the price is moving. So, maybe I'm only going to make 30,000 on that, but that is the best play that I'm looking for right now in this market. And it will happen at some point in this downtrend because people keep buying the dip, they buy the dip, then they get dumped on. And then at some point, everybody's going to be selling because they're in mass panic because the dip buys are not working. The people that have been buying the dips start to sell, they start to panic, they start selling at losses. Then you have other people in the market starting to sell. There's a big spike down. When that happens, buy calls. You can buy 0 day, 1 day, 2 day, 3 day, weekly calls, whatever it is. SPY will likely move anywhere from 2 to 6% in a 1 to 3 day trading range, and we'll have a really strong push. What I'm looking for, though, is like a move to this 532. That's a low volume node, and then there's like a shelf here and a shelf down here. I think in this like 520 to 532, even all the way up to like 537, this zone, depending on how down volume is trading, where the VIX is, if VIX is over like 30 or 40, right now it's at 22. If all of those stars align, price is hitting a support zone, down volume's over 90%, VIX is over 30, I'm playing those calls and I'm trying to turn a little bit of money into a lot of money. So if you want to see that in real time, I'm going to be posting it all in the Discord, completely free. And I'll see you in the next video, guys. Stay safe out there. Peace.